Welcome to The Spread. I'm Matt Rabel. It's been a relatively quiet year compared with last year, but some traders seem to think that's going to change this summer. Options traders made a $40 million bet last week that the VIX will break 25 points and climb as high as 40 by July. A block trade of 200,000 options of the VIX July 25 to 40 call spread traded over the course of 2 hours on April 8th, taking up about a third of VIX options trading volume for that day. It's not clear if these trades were made by one person or several, but it implies that some think that the current calm in the market ain't gonna last. FINRA sent out a notice this week reminding its member organizations to exercise what it calls, quote, reasonable diligence regarding options, account approval, supervision, and margin requirements. Naturally, this was a reference to the growing popularity of self-directed retail traders, and I think it was aimed at one FINRA member in particular. It's as if they were saying, we're not naming any names, but their eyes were pointed directly at Robinhood. Miami International Holdings, the parent holding company of MIAX and Vesica Technologies, announced a partnership this week. Vesica is a trading analytics startup, and it looks as though the big get of the new relationship for MIAX is Vesica's Shift platform, which provides information on daily market movements, volatility, and other useful data. Shift is going to be made available for options traders on MIAXoptions.com as a result of this deal. Shares for Barclays tanked 10% on Wednesday due to what's called a fat finger error. No, that's not another name for the gesture you give someone who cuts you off in traffic. It's an easily made human error that can have huge consequences. They call it a fat finger mistake because theoretically, it can happen when somebody hits the wrong key on a keyboard by mistake. Although these errors are sometimes corrected when such orders get canceled in a timely fashion, Barclays' market capitalization tanked by about £3.2 billion or $4.4 billion when two trades totaling about 48,000 shares were entered at a price of 168.40 pence, sending the stock into a volatility auction. Since we're already talking about Europe, EuroCCP is reportedly incorporating equity derivatives into its cash equities and ETF business to help launch Cboe Europe Derivatives, which is Cboe's new pan-European derivatives trading business. Kind of reminds me of the Beatles coming to America being referred to as the British invasion in the 1960s, though I doubt they'll call Cboe's ongoing expansion into Europe the Chicago invasion or something like that. It doesn't quite have the same cultural connotations. EuroCCP made several changes to its senior staff as it positions itself as a multi-asset clearinghouse. Arnoud Sigman, Chief Risk Officer at EuroCCP since 2008, is the new Chief Operating Officer. Jonathan Tran, who joined EuroCCP in 2018, will take over for Sigman as the new Chief Risk Officer, and Ed Hughes, who came to EuroCCP in 2019, has been appointed the firm's new Chief Technology Officer. Time will tell how things will turn out given all the economic changes happening in Europe these days, but it seems like Cboe's new venture is in good hands. We've got a lot of new content up on johnlothiannews.com. John's been busy interviewing Brendan Bradley, author of ESG Investing for Dummies, and Cove Market founder Scott Knudsen. Knudsen's the newest interviewee in our Path to Electronic Trading series, and John published a standalone interview with Knudsen as well. Check out johnlothiannews.com for these videos and more, and follow us on Twitter, LinkedIn, and Facebook at the links below this video. And that's going to do it for The Spread this week, so until next time, stay safe and happy trading.